Hey guys, AKIL'S here. Welcome back to another Weekend Trading Edge video. If you guys are brand new to the channel, welcome. This is a weekly video that I put out each and every week, and where I share a few of the top trading opportunities that are on my radar for the week ahead, and of course some great technical tips and psychological tips as well on how to become a better trader. Make sure you subscribe to the channel. If you do, you're going to see lots and lots and lots of other videos. These are just random things that I put out during the week, either sharing with you trade walkthroughs from my live trading room or video versions of the Trading Coach podcast, like the one we just released on Dow theory, and kind of explaining those foundational elements and how they relate to your trading. So lots of content here on the channel. Just YouTube search AKIL'S and the topic of your choosing, and more than likely you'll find like 5 or 6 videos that I've done on those topics. So we've got a lot to look at on the watch list this week. Some very, very good opportunities, and some opportunities that are not so good, maybe a little bit iffy, but are very interesting to speak about, and I want to give you all of that. So let's start off here on the euro dollar. Euro dollar is one that we were tracking really all week, but specifically late this week on the Tier 1 trading platform. And what we were looking for was this structure shelf to be violated, and we were looking for a continuation down. You can see that happen just like we called it, which was awesome. Now, the thing about this, however, is that we had multiple levels that we were projecting. We had a very conservative level, which was right here. You can see this inside level of structure. And we had a more aggressive level, which was down here. You can see this outside zone of structure. Now, obviously, price has come to that inside level of structure. We have technically not broken and closed below that level. Inside structure is weird with that type of stuff, so just ignore that fact. But the point is, we have come to that level of structure. We have retraced back up again, but there's still room to move to the downside. In fact, if I just take a Fibonacci, I don't want to erase all of that. Let's just erase this. If I take a Fibonacci extension, I bet we're going to have some type of confluence at that level. Fibonacci extension tool, which is used to project where price action may extend to, from our swing high right here, this little green guy, this pin bar, to our swing low right here. Should probably zoom in and make it easier. And boom, if we go straight down, we've got two things happening. We have a 127 extension sitting right under the 110 even handle. That is a psychological number, or a dollar even. Oh yeah, 110, sorry. Yeah, 110 even handle. That's a psychological number. And then we have the 1618 a little bit lower in that zone, sitting right above another psychological number, which is 109. So both of those levels are decent levels to shoot for if you're projecting that extended target. Now, how do you get in? Well, there are a few ways that we can get in. I actually got a question about this under one of my last YouTube videos saying, Akil, can you show how you go to a lower time frame to look for entries? And I said, if I have an opportunity, I'll show it. And guess what? We've got one. So I'm going to show it. But first, we're going to go up to the weekly, or excuse me, the daily time frame, because if you're a higher time frame trader, there's also a way to get involved here. So let's pause that thought 1 second and let's go back up to the daily, right? If we go up to the daily, you can see that we still have our normal zone down there. We'll keep these levels on here. Let me just erase this finally, and I'm going to draw back in our targets at 110 even, bang, and 109 even. Again, these are rough areas, but you guys get the point. You can see what we've done here on the daily chart is after spiking down, right, we've retraced back up. We've put in some pretty good bearish candles, right? If you look at the wicks on these candles, right, they are all predominantly to the upside, which means the bulls had tried to push up and they got rejected. We ended such of these 3 candles with a lower low, lower close. And if you guys have been friends of the channel, you know that a lower low, lower close is a very important candlestick signal for me, either for a violation of structure, which sets up a new prediction, or an actual entry. So if you're someone that's entering here on the daily chart, you may have an entry reason right here at the lower low, lower close. I don't know if you're going to get a good risk reward. That's a different story. Let's just kind of mark it out since we're here already. If you got in that market, an ATR stop probably wouldn't do it for you. I'm not going to take the time to calculate it, but assuming your stops are above that that highest red candle, probably wouldn't make sense, or maybe just make sense if you're going for that 110 level. If you're going for the 109 or a little bit down there, you can probably make it work. But certainly a tradable opportunity here on the daily. Now let's go back to what the traders asked about going down for a lower reason for entry. Well, here's what we would do. We have on the 4-hour our break and close below structure. You can see our pullback right here. So we're asking ourselves, okay, within this pullback, how can I look for a smaller pullback in order to get involved in the trade? So we hop down to our lower time frame and we see that price is pulling back. This is where you would wait for price action to give you your reason for entry, whatever that reason for entry may be, within your zone, right? So our zone is going to be big, right? By the way, if you're screaming descending triangle, thumbs up. I'm not on video today, but I'm giving you a thumbs up and a cheesy smile. Good job, right? But this is your zone, right? Essentially, you are looking for price to pull back anywhere in this zone. Technically, the zone goes all the way up to here, but this is the zone that we're really paying attention to. So what you would be doing, let's say if you require a lower low, lower close, is you would wait for price action to push up in this zone. Who knows where it will go? I can't tell you that, right? This would be a good level right here, about 111.97 or 112 even would be a fantastic level. And then once we get to that level, or once we get in the zone, once price action gives you your entry reason, lower low, lower close, then you would enter the trade. So it's essentially going down to a lower time frame, taking out your magnifying glass, getting a kind of a more in-depth view, a more detailed view of what's going on, and looking for your entry reason there. So decent opportunity on euro dollar, not a super grade A opportunity because we've already come to that first conservative level of targets, but I still think there is meat on the bone here, and it's certainly a nice play, especially if you're looking to go all the way down to near that 109 level. Next up is going to be the pound dollar, and think about the pound dollar in this case as being the lagging euro dollar. So this is going to be a very similar setup here, right? Price action is coming to this level of previous structure support. We've tested it already and retraced. However, if we go down to the 4-hour, what we're seeing is that if we can get a violation of this level, if we can do this, whoop, right, then that sets up pretty much the same opportunity as we saw on euro dollar, where we're looking for a retracement and a move back lower. Just like the euro dollar, we're gonna have two levels here. I'll give you a really conservative level for targets, which would be, I'll give you a zone. Zones work better than just straight lines. This would be a very conservative zone right here for targets, and a more aggressive zone would be down here. I need to go down up to the 4-hour again just to kind of see what that looks like. Oh yeah, that's dead on the width of that candle. Yeah, so two opportunities here on the pound dollar as well. Again, very similar to the euro dollar, but first things first, we need to violate that yellow line. Until we violate that yellow line, nothing else in this scenario matters. Now, heading back into the 4-hour chart, one more thing to look at on the pound dollar, and I forgot to talk about this on the euro dollar too, so we may have to go back. We have a potential advanced pattern formation forming as well. If we look at this initial retracement, this swing low to this swing high, this is going to be the starting point for my advanced pattern formation. If you're new to advanced pattern formations or harmonic patterns, these are basically multi-legged patterns that tend to form during consolidation in the market that have really good results if you know how to trade them correctly, and of course spot them, because they are a little bit difficult, but they have been a staple of my trading, and I've been using them for the past 15, 16 years now. One of the reasons I like them is, one, they're rules-based, so it keeps me out of trouble, especially as a younger trader when I want to be a wild cowboy and do all types of weird stuff. It was very strict with its rules, which is something I needed. And also, they form during periods of consolidation. They tend to form during periods of consolidation. And if you know anything about the Forex market, it tends to consolidate the majority of the time, usually about 70% of the time, if not more than that. So it's they're not big money makers. You don't get wowed by their 800,000 billion pips, but I call them steady Freddies, as they just consistently churn out opportunities and consistently churn out profit. So it's a good kind of steady income maker that allows me to do some other aggressive things with the rest of my trading strategies. But this one's going to be a bat pattern. I will draw it out for you. I'm going to take a Fibonacci retracement this time from my swing low to my swing high, and you can see that our first move comes down to our 50%. So that's going to give us this first move. Let me just do this. I'll make it easier for you. This first move, swing low to swing high, is going to be our X leg to our A leg. This first retracement is going to be our A leg to our B leg. Our failed extension up is going to be our B leg to our C leg. And for the bat pattern specifically, we're looking for a decompletion right at the 886 and going all the way to the bottom of our X leg. So this would be an opportunity to buy if you are a pattern trader. And again, if you're someone looking to trade this short, this is somewhere, I'm trying to get words correct. It's Friday night, sorry guys, where you can use a stop and reverse, meaning that you would stop yourself out of your short position. Where's my money thing? Make some profit. Yay! And then immediately go long the opposite direction and hope to make profit again. Now, real quick, just going back to the euro dollar. There was a smaller one here in the euro dollar as well. You can kind of see it. I won't spend too much time on it here. I believe it was the 4-hour chart. Yeah, right here with the same thing happening here. X to A, swing high to swing low to swing high. A to B, B to C, and then a CD completion right around that 110.87 level. Next up is the dollar Canada, and this is an interesting one because this is a trading opportunity that, well, I'm really unsure about, and it brings up a good conversation I've been having with a guy on YouTube where I won't get too much into it. I kind of just ended it all. I called it off because we weren't getting anywhere, but pretty much the trader was saying that there's no such thing as an edge in trading aside from risk management. Everything is a gamble, everything is lucky, everything is 50-50. And I was trying to explain to the trader that no, there is such thing as an edge. There is such thing as luck too, but luck only works in the short term, meaning that you can randomly place a trade and get lucky and win. But if you did that over a long period of time, you would lose money and go broke. And that an edge plays out over the long run, meaning that you can have an edge and any individual trade can still be a loss, and that's okay. But if you have an edge over the market, that in the long term, you will make profit. And we agreed to disagree. If you guys want to hop in the comment section, if you have an opinion one way or the other, I'd love to hear it. I know I'm right in this situation, so that's why I stopped the argument. But it's ironic that I literally just, maybe not literally, but like literally 10 minutes ago, finished kind of typing my response to the trader saying, hey, let's agree to disagree, but not really disagree, but, good conversation. And then I go ahead and find an opportunity that I actually think is completely random and 50-50. Actually, that the pattern itself is a 50-50 pattern. So do I win? Do I lose? I don't know. Maybe I shouldn't have put this in the video because now it goes against my case. But anyway, it's it's full transparency on this channel, and these are good discussions to have as traders. But we need to start off analyzing the dollar Canada from a big picture perspective. This is that IPDE process that we speak about all the time: identify, predict, decide, execute. And if we identify what dollar Canada has done / is doing, we've been in consolidation for a pretty long time here, right? You can see our initial high right here was back in 2016, and then we came up and hit it again back in 2020, 19, somewhere around that area, and then we recently hit that level again. Now, this is important to know, right? Because it means that we are not in a full-blown bullish move. We have come up to our previous level of structure resistance, these highs from way back when, and we have held and we have gotten rejected. Where did we get rejected to? Well, we got rejected right back to a previous level of consolidation that we played before we got to that level. I remember this. Oh, there was so much good trading in here. Anyway, we need to understand this because we need to have the right perspective of the market that we don't know what it's going to do, right? There is nothing here saying price action will continue up. There's nothing here that says price action will continue down. We are literally at a point in price action where we just don't know. And that doesn't mean you can't find trading opportunities, but we need to notice so that we can involve ourselves in the right trading opportunities with the right profit target projections, with the right stop loss. So let's go down to the lower time frame, or do I want to stay here? Let's go down one to the 4 hour, and let's stay on the daily real quick. This is something that's even more interesting. Just to add to our confusion, we have two kind of contradicting patterns happening here as well. So we already know that we're in consolidation. We've come to a previous level of structure, right? We've then put in this pattern right here, which is called a falling channel. A falling channel is a loss of loss of momentum pattern, a deceleration pattern, which is typically followed by a move in the opposite direction. So a falling channel shall rise, a rising channel shall fall, right? Not all the time, going back to our 50-50 conversation, but if you track every single one of these patterns, specifically those that come at key levels, you're going to find that more times than not, right? Numbers, odds, probabilities, they tend to move in the opposite direction. See, it's not completely random. You just got to do your numbers, right? In fact, I would say this, man, see, look, now I'm getting back into this conversation, which I said I would end. If you want to, I advise testing everything yourself, but if you want to shortcut something, check out the book, The Encyclopedia of Chart Patterns by Thomas Bulkowski, where he does the work for you, where he takes a look at a lot of classic patterns and he pretty much breaks down their percentages. Now, this is based off the stock market, which is a completely different game than the Forex market, but still, if you want proof of numbers and trends and probabilities and odds and expectancy, go look at that book and then do it yourself. So we have this falling channel, which we rose up from it as we would expect. And as we go down to a lower time frame, you're going to see that we came right back into a wedge pattern. Now, wedge patterns, triangle patterns like this are historically 50-50, meaning that there's no probable way to expect. Now, there's the wedge within itself, right? There are other clues that we can use to form directional biases, but just the wedge, just the triangle within itself, has no probability of breaking out one way or the other. It is kind of it's a coin flip, pretty much. So when you see patterns like this, what you want to do is you want to use your other clues of what is the higher term time frame trend? You know, are we at a previous level of structure? Did we violate a previous level of structure in order to make a prediction? The problem with this, as we spoke about on the higher time frames, we're kind of in the middle of no man's land, right? We had just come down to a previous level of structure. If I draw a line right here, you can see we're right at the top of a previous level of structure resistance, which is broken and became support. And if I draw a line right here, we are right at an inside level of structure here as well. So where are we going? I don't know, right? But here's what you can do in this scenario. And I was just talking to a trader on Instagram about breakouts. You don't have to make the prediction before this pattern occurs, right? You can wait for the market to show its hand. I love telling new traders that I work with this quote. As traders, because a lot of traders think we need to be like predictive right away. I need to predict something, then wait 8 months for it to happen, right? No, as traders, we want to be predictive in our analysis, but reactive in our execution. And what that means is I want to use all my skills of technical analysis to make a prediction. I think price is going to do this based on blah, 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 blah. But I don't enter right there. I wait for the market to show its hand. And if the market shows its hand in the direction that I predicted, then I get involved. So because you don't have a firm prediction, bullish or bearishly here, right? You don't need to enter one way or another. You don't have to close your eyes and just click a button. Wait for the market to show you, right? Wait for a violation of one of these trend lines or the horizontal levels of support and resistance. And if price breaks out to the upside, and I say one of these levels because it depends on what you value. I value horizontal support and resistance personally. I'm not a trend line person, so I would need this pink line to be violated. But if you're a trend line person, wait for price action to violate that trend line, confirming your bullish suspicions. That's a bullish suspicions, right? And then look to get involved to the upside that way. And vice versa. If we break out to the downside, then you look to get involved bearishly. So although this is a neutral pattern, it can still be traded. It still has an edge once we get these violations of key levels, and then you add your risk management tactic to that, and that just increases your edge. So take that, trader. See you in the comment section. No, please don't. I don't want to continue the conversation. I don't want to start beef. It's just, this is fun. This is a fun video. Good conversation. Now, speaking of good conversation, we have a lot coming your way because on May 29th, we are hosting yet another online trading workshop. We do these every few months or so if we remember to do them, but we are doing one May 29th because I wrote it down. So if you look in the description box below, there's a link that you can sign up for. We are capping the seats at 500. So once 500 people sign up, it's going away. So make sure you secure your spot. We're going to teach you everything we know about trading. And if you've ever been to a workshop before, you know how valuable it is. So mark your calendars for that. I believe it is a Thursday and it's going to be a one-day event and it's going to be awesome. Now let's look at another awesome opportunity here on the Aussie Canada. We spoke about patterns earlier and how they tend to form in periods of consolidation. Well, if you were to look up the word consolidation in the dictionary, if people use dictionaries anymore, I don't know if they do because we have internet and stuff, but if you were to have a dictionary and if you were to look up the word consolidation, you would find a picture of Aussie Canada in there because that is all this pair does, which makes it a really dirty and disgusting pair similar to the euro pound. Ugh. But if you're a pattern trader, it also means a lot of freaking opportunity. So I really enjoy this pair, and that's what we have today. We have a potential deep Gartley pattern forming here on the hourly. I'm going to stretch my chart up because this thing is kind of tiny, but I'm going to shortcut it for you real quick just to save time because I feel like we've gone like 20 minutes already in this vid. But here's what we're looking for with the Gartley pattern, right? The other pattern we looked at in the past was the bat pattern. This is very similar. It's still an M and W shaped pattern, just a different rule for the decompletion. But what we're looking at is still our swing low to swing high, X to A. That's our starting point, our initial impulse leg or anchor leg. Our retracement back here is going to be our A to B. If it hits the 786, it is invalid. This one is at 74.9. There's no close enough, or if there is a close enough, have a strict rule for what that means. But for me, there is no close enough. It either hits or it doesn't. Black or white rules. We then come back to a nice retracement right here. And then we're looking for this 127 Fibonacci extension, right? I took that from the A leg up here to the B leg down here. And that is going to be our projected decompletion, that zone right here. So it's a really, really deep Gartley pattern, which is awesome because it's going to give us a very good risk reward. And the risk reward isn't always great with these advanced pattern formations, especially the Gartley pattern. So when we can get one that completes really deep in the zone, it's going to be a good one. I'll give you an idea of what the risk reward actually looks like here. Fibonacci retracement, swing high to projected swing low. Let's just use a 113 to project our stop loss. And I'm pretty sure we're gonna get like a 2-to-1 on here, probably more than that. But entry right at the decompletion, bang. No, wrong way. Long opportunity, Akil. There we go. Entry at the decompletion right here, bang. Target at the 3-2. Stop loss at the 113. Ooh, baby, 2-to-1. Look at that. Now, what if I told you you can look for an even better risk reward on this as well? And this is an interesting one. It falls in line with a conversation we've had on the Trading Coach podcast a few weeks ago, where I spoke about a fake trading strategy that lost a lot of traders a lot of money and made me feel bad about myself, even though it wasn't my fault. But there were ways to do it. That is the aggressive C, right? So let's hold this risk reward right here. And I'm going to measure something else out for you, right? I'm going to bloop and get rid of this stuff so we get a cleaner chart here. And I hope I don't delete anything that is relevant. There we go. If I start looking up here and I measure this move out, you're going to see that this is actually the starting point for another potential advanced pattern formation. It's going to look like this: swing high to swing low, X to A to B, B to C would be down here if we go that far, and then a C decompletion up at the 886. So if you were to trade this Gartley pattern, this would also be a legitimate excuse of aggressively getting in the C leg of a bigger potential bat pattern. Now, should you do it? Probably not. I think I would not do it, just full disclosure. But we were having conversations about if you are going to do something, do it the smart way, and this would be the smart way to do it because you're not entering this C leg simply because it's the C leg of a potential pattern, which makes absolutely no sense. But you're entering it for its own legitimate reason. It happens to be the decompletion of a Gartley pattern that just happens to be at the C leg of a bigger potential pattern. If you were going to do it, my advice would be this, right? And of course, I don't give investment advice, disclaimer stuff, right? But I would take your initial targets how they normally were based off of the Gartley pattern, which are right around here. And then whenever you want to get risky, right, I would do that with your secondary target. So if you have a target 2, that's when I would look to get that target 2 and shoot for the home run, right? There are spots in between I would shoot for, like right here at a retested structure is 190 even, or 89, 68, and then target 2 being at the 90 even right here. But to each his own. Now, one of the reasons I'm not too sold on the aggressive C is that I also think we can go lower here on Aussie Canada, right? Next up is going to be the pound New Zealand. This is another interesting trading opportunity that I'm not quite sold on, but I think it is a good discussion point, and that's what we do here on the channel. If we look at the pound New Zealand on the 4-hour, here is what is important. We recently broke and closed above our previous structure high. Look left, structure leaves clues. A break and close above those highs allows us to make the prediction that price is likely to go higher, confirming or giving us a positive confirmation bias. And what I mean by that is, instead of looking at the chart and having that analysis paralysis where we're like, oh, I can get bullish, I can get bearish, I can go sideways, right? And we're all over the place and getting weird. We know that I am looking for a bullish move, I'm looking for a bullish move, I'm looking for a bullish move. And again, that is the point of that IPDE process. We want to identify what the market has done, what the market is doing. We then want to predict, based on what we identify, what direction we think price is likely to go in. And then the next part of that prediction process is, if we're likely to go in that direction, bullish, then where are we likely to go? And this is where this one gets a little bit tricky, right? Because if we look left, it's a little bit difficult to find a solid target level, right? We've done this little just, I'm picturing a fondue place and cheese and or chocolate, or cheese and chocolate combined, if you're in that sort of thing, just melting and dripping off the fondue fountain just onto the floor, right? It's very sloppy and nasty. It's hard to kind of really project a key profit level. When we were speaking about this in the live room, the one level that stood out for me, if you made me choose something that looked nice in this area, I would pick this area right here. And the reason is we have our previous structure low support lining up with previous structure highs of that very small level, resistance, a little bit of an ice zone there. And you can see that's not that far away. But I also told the traders, if we can clear this level, oh baby, it's free sailing, right? I don't see anything in the way, right? We are in a big block of consolidation. But that aside, I don't see anything in the way of us going to this level right here, right? 23.18s. Excuse me, 231.88s, right? I got 26.18 on the mind for another trading example. But yeah, so there's a massive amount of, there's a little bit amount of room from this level to this level, but there is a massive amount of room from this level to this level. So it could be one of those opportunities where, hey, if you have this projection, if you are saying, hey, Akil, I don't really care about minor structure, because that's all this is minor structure right here. This could be a very big opportunity for you. Let me just bring out some volume real quick and just see what this looks like. Yeah, everything's going to be stuck inside here, which is what I suspected. Now, trading wise, you already have a trading reason, right? We talked about a higher or a lower low, lower close earlier. This is a higher high, higher close. Something you can do is you can get on board at market right here. You're getting a little bit of a discount actually, but this would be our higher high, higher close, this green candle, right? To almost end the week. Stops would be below these lows right here by, an ATR, whatever measurement you use. If you're looking for a short move up, you can still probably get a really good, a decent risk reward to that move. And again, the second move up, whether it's with a primary target or a secondary target, would be massive. Like with the last example, what I would do if I were trading this situation is I would always be conservative with my first one, right? So instead of shooting for the moon up here and trying to be super trader and get a 4.5 to 1 risk reward, I would look to get a little bit off either at a retest of the highs or that first level we spoke about, and then keep the second half of your position or some portion of your position on for that home run trade. Because if this thing goes, it can go, right? We're looking at, what is this going to be? How many pips are we going here? If we enter right here and we rally all the way up, mere 600 pips, nothing Nothing too shabby there. That could be a massive trade. That's one that can make your trading year if you hit one of those bad boys. Let's just scroll down to the hourly real quick to see if there's anything that stands out here. Another option here on the hourly is this. You can see that we're starting to retrace a little bit. We're bending off a little bit to end the week, which is no surprise. You can look for a potential double top, or excuse me, double bottom. That would be a more conservative entry, meaning that price action comes down to this level. We hold, and it's very important that we hold. If we break and close below, bad sign, right? We hold down here, and then you may be able to get an even bigger risk reward. And that would open up the door to some more trading opportunities as well. So cool opportunity here on pound New Zealand. It's not my favorite because, again, those initial target levels are kind of confusing, but there's a massive amount of room to that big one. So this is one of those situations where I'm glad I don't trade this pair. I don't have to have any dilemma. I can sleep well this weekend, not worrying about if I should be involved or not, or just it's up to you guys. It's on you. There you go. All right. Lastly, I've been meaning to do a video on this all week, but I've been doing other videos for you and didn't feel like doing any more videos because you guys get overwhelmed when I produce too much. But this is gold. We've got a bat on gold. We've got a swing low, you should notice by now, right? Swing low to swing high right there. We've got to move down to our 50% Fibonacci retracement, and we are looking at an X to A to B, B to C, and a potential CD completion down here. Now, if you are someone, right, if you don't know the trend of gold, here you go. Say no more. If you are someone that was looking to get involved in gold, meaning you liked gold before, price was too high, you're waiting for some relief, there is no better excuse at no better point technically to buy than right here. Now I say technically because fundamentally you may have some different opinions with all that's going on and switching and continuing to go on, right? So you got to figure that out yourself if you're going to take a fundamental approach to that. We don't have enough time to debate the back and forth of that right now, and safe havens and dollar strength and interest rate cuts that are coming, maybe, well, yes, coming, but when coming, and tariffs and whatever. But from a technical perspective only, if you are looking for a place to buy gold, this is going to be the perfect spot, because as we ebbed and flowed, right, and we put in new structure highs and outside returns and new structure highs, this is our previous outside return. And what that means is that if this bullish trend is going to continue, this level, 3K, gold 3K, right? We're right underneath 3K, right? Right above 3K, right? Gold 3K should not be violated. If this is going to continue in this bullish trend, this level should not be violated. So you are putting yourself in position to purchase at kind of the last battleground and at probably the cheapest price you would ever get, at least short term now, as far as getting involved in the bullish trend. Now, if we violate that level, it doesn't mean it technically means the bullish trend is over, but we can always consolidate and go back into it. So I'm not saying that gold will be bearish forever if we break and close below. No, that's not the case. But per our rules of reading trend, right? If you guys listen to the Dow Theory podcast or watch the Dow Theory podcast, you know exactly what I'm talking about. This would be where that excess phase ends. And if buyers are interested in getting back on board gold, it would be here. You're welcome. Before you guys go, do me a favor, hit that like button, subscribe if you're new. Again, this is my less busy part of the year, so I plan on doing a lot of content on the YouTube channel. So make sure you're around to check it out, because I'm giving gems and I'm getting a lot of questions that can be answered simply by you watching the videos that are on this channel. So if you're ever in doubt, feel free to reach out to me, but also run that YouTube search, AKIL'S Stokes, blank, 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 and see if a video comes up answering your questions. Hope you guys have a great weekend. I've got soccer tournaments. Yay! And until next time, plan your trade, trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.